Hello. We're throwing this panel together because of some technical issues with Charlie Schramm and the fact that we're also going to schedule some stuff tomorrow anyway. So what we want to talk about is ASIC miners and ASIC mining and all that sort of thing. And I would first like to ask when you found out about Bitcoin and ASIC mining and when you started working on hardware for mining. We'll start at the end there.
In our company, it started in the summer of last year.
Can you a little closer?
Yeah. We actually started working on a chip in June, July of last year, and we were able to bring up the first product in November of 2013. And if you can give us a few more weeks, we'll have a second generation miner that's coming out.
Tell us about it.
I can't tell you much yet, but it will be an in-stock sale.
Oh, go on. That's what we're here for.
Yeah. It will be close to 800 or terahash miner.
800 or
gigahash
or a
1 terahash.
In the same chips?
It's going to be the same 55 nano chip.
So how big is it? Is it smaller than an elephant? Bigger than a...
No, the size is going to be about 4U in a case. It has a lot of hashing PCB in it. Basically what we did is we severely underclock in order to achieve 1 watt power consumption per gigahash.
Cool. Okay.
Well, my story starts just a little bit earlier than.
Remind us of names, because actually I'm a name-free zone. I don't even hardly know my name.
Who's that? Who's talking?
Somebody. I don't remember.
My name is Matthew Carson. I'm the co-founder of MinerSource.net. Unlike most of the other gentlemen sitting at this table, we don't do directly manufacturing the hardware. What we do is we work with the manufacturers, we work with the developers, in order to provide essentially end-to-end mining services. So if we have a client who comes to us and says, I need 50 terahashes set up by this date, here are my power requirements, we work with both the client and the manufacturer to essentially ensure that it goes off as seamlessly as possible. That includes, we have our own internally developed monitoring software suite, which does everything from monitor individual miners to, I could have a warehouse with 10, 15, 20 megawatts of power with thousands of customers, and each customer has their own account with direct access to their miners. Rather than, say, in a cloud hashing scenario where you have access to your account with your hash rate, this gives you direct access to your hardware. But we started out, actually, my partner and I, with, I want to say about 17 or 18 AMD GPUs in our garage. Back, I don't know how many people remember when GOX first ran up above $30. And that was headline news for the Bitcoin world. We started mining shortly before that. So,
but wait, now, literally your garage?
Literally my garage.
Literally your garage. That's
in Texas during the summer. Not the smartest decision we've ever made, and you could say the landowners were not happy with the power bill that month or those months. But taught a lot of valuable lessons, like always wear anti-static all the time.
Wow.
I've got one sitting back at my table, so yes, almost even now. That's basically what we do. We've worked quite closely with several manufacturers.
Okay.
That's pretty much it.
Okay. Jez?
Hey, I'm Jez. I ordered my first piece of mining equipment back in February, so that was Butterfly Labs, and obviously I started receiving it in November, so that was, and that was one of the early ones. I also placed orders with other mining companies, including Hashfast and Cointerra, who are both represented kind of here, and KNC. Sorry, I missed that KNC. So, my policy was to order some miners from multiple companies to spread my risk, and who knew who was going to arrive first or who was going to be, have the better systems. So I tried to avoid taking that risk by getting a bunch of different systems. I also invested in ASIC miner and then sold out of that. So I'm still mining. I have a bunch of hashfast gear and a bunch of Cointerra gear and some KNC, and one bit Fury as well.
What's your hashing power?
I'm going to decline to comment, but a decent amount. Yeah, more than 3 digits of terahashes.
So I first started looking at ASIC seriously about...
Name?
Oh, sorry. I'm Sean O'Connor, and I'm looking at it mostly from the perspective of an investor or somebody looking for exposure to Bitcoin as an asset class. And so for me, the reason I was looking at mining is that there were a series of like downstream like insurance or derivative products or just long exposure to Bitcoin that I wanted to have a predictable source of the underlying. And the most predictable large-scale source of underlying Bitcoins was to make them yourself, or to work with people that are generating them on an ongoing basis. And so like about a year ago, I was talking to a group that were doing or waiting for their Avalon ASICs, and they eventually got them and got them together. But while they were waiting for those Avalons, I ended up meeting the HashFast guys and getting sort of involved as an early advisor and potential, investor in HashFast. And so to me, I've seen a lot of this play out from, stopping by the HashFast office and seeing what's going on in that sense, and also just seeing what's going on in the ASIC scene in general, and just as an interested and enthusiastic investor in this asset class in general. So I think that there's still a lot of promise, and there's only really probably a few really solid good years left of generating the stuff yourself. So buy them while they're hot.
Daniel, I represent Cointerra today. Our CEO, Ravi Iniger, is running around right now somewhere around here. Cointerra was founded in May of 2013 by a former lead chip designer from Samsung, amongst others, with the idea of manufacturing and developing sort of best-in-class ASIC solutions. We started shipping our first ASIC-based miner, the TerraMiner 4, in January, and as of a few days ago, we had shipped just over 1,000. So currently, our product is powering right around or just under 10% of the Bitcoin network, and it's a 28 nanometer ASIC, and yeah, that's right around where we are.
Very cool. Now, I met Ravi, I think, in I want to say March or April. It could have been as late as May, but I don't think so. And we had quite a lot of interesting discussions about where mining was going and the future of mining and that sort of thing. Now, one of the questions about mining is whether or not people want to, you were mentioned that the best place to find Bitcoin that is not owned is the Bitcoin to be mined. Okay.
Well, I get the point was that that's the most predictable way to get Bitcoin. It's not just that it was unowned; it's just predictable.
Well, okay, predictable. All right. And so, is there something emotional about mining and getting that Bitcoin? Do y'all see the emotional component, and how does that strike you, and how do you see that in your customers? Anyone?
Yeah, I mean, I can probably, from a sort of first-hand perspective, I think a fair amount more than I expected of our customers focus maybe slightly less on Bitcoin ROI than I expected. I mean, it's exceptionally hard to forecast ROI. Basically, you would have to know fairly deeply know the amount of hash rate to be shipped, all the companies involved, and sort of interest over time. My experience is that we have a fair amount of customers that treat mining more like a hobby than anything else. Like, it's the same kind of people that build overpowered gaming computers, not because they need them, but because they like the idea. I think at least partially, hobby mining is, part possible profit and part, people that like tinkering, like myself. Like I love the idea of, having a box sitting at home and fidgeting with it, whether or not it's worth it or not, to tweak it 10% at the cost of bloody knuckles and maybe breaking it. Probably not, but it's kind of fun.
Okay,
So, yeah.
there were some nods over there. Any other observations?
As a manufacturing side, we receive a lot of requests to meet the price that purchasing price will be basically granting on the ROI based on how many Bitcoins our miner can produce. So our sales model is we recalculate the sales price daily based on the difficulties and other factors. And one side effect is when somebody purchases our miner at a certain price, 5 minutes later, price drops, and at the same time we have some happy customers, and a few minutes later we have a little not so happy customers due to the price drop. But our price difference is based on the shipping date base, and we do have a lot of customers that are into Bitcoin as a hobby, as well as commercial investing firm side, as our Antminer is providing just over 20% of the entire network hash as of 2 weeks ago. And I think the number has increased since then, but the number I have is 20-point-some%.
So that's 4, 5 petahash?
Quite a bit.
Okay. Can we have a show of hands? Who here is already Bitcoin mining? Okay.
Oh, wow.
Great. So the dilemma the really complicated problem that we have as Bitcoin miners is trying to predict the network difficulty and trying to figure out whether the cost that we've been offered to buy our Bitcoin miners is the right price, and whether we should be buying Bitcoins instead with whatever we have to spare. And it's a really difficult problem, and all of us have different ways of trying to forecast it and trying to calculate it. And as mentioned, some people just like to mine because of the emotional attachment or the contribution to the Bitcoin network, and some people actually want to get a return out of it, and it's very difficult.
How many of you all in the audience would mine even if you thought there was a huge chance that you would just break even? I've got wow.
Wow, can I get your business cards?
Wow. Okay, and that kind of suggests, I lost that thought. I had a good question and it's gone. But as far as, okay, so here's the deal. If you guys are taking 6% and you guys are taking 20%, what is your concern about your miners being used in a mining pool that risks the network?
Our policy is we're trying to make sure we do not push out more than 50% of the network hash. But
Well,
we're not there yet, but...
Well, but it's not necessarily your hardware, it's your pool, right?
Mm-hmm.
So do you have a pool as well?
We do have an internal pool, but we don't publish it yet for customer to join. Those are just a testing pool.
Okay.
And it's the same thing for us as well. We have our own internal pool that we use for our clients and our own machines, but as of now, it's not yet publicly available.
Okay. Anyone else have observations about pools and pool sizes?
I think that, Ghash came very close to 50% not long ago, and as soon as the market realized it, they switched very quickly off it. It is dangerous when you have too many people attracted to one pool, so it's only happened recently. But I don't think it's a manufacturer's problem, because none of the manufacturers force you to use a particular pool, so it's really a voluntary thing.
Yeah, I would second Jez's point. Ghash is the most, the fraught example in recent memory. I mean, in the past, there were some situations where maybe BTC Guild or one of these other pools got pretty close to something that would let them do some double spending attacks and things like that. And I think it is critical to think about, using a pool that, balances out the network and helps the network verify the transactions in a sane and healthy way. And that's something for each miner to consider and each pool operator to consider as they're, running their equipment and their resources.
I mean, even the large miners, even the professional miners that have a large amount of hashing power, they take care to use multiple pools. They try not to put it all with one pool to keep it,
I would encourage people to try a P2P pool, for instance, is one example. I think that's a good alternative, like counterweight to something like Ghash.
Okay.
I would also probably say that I think the danger used to be, at least, like a single very large miner, someone for some unknown reason having an agenda to destroy Bitcoin by forking it or doing double spends. Not that it would destroy the network, but because it would obviously be bad enough news that at least the price would be adversely affected. But I think that now that there are multiple companies selling multiple mining solutions in volume, the risk of sort of someone being able to disrupt the network, it goes down with the amount of hardware out there. And any serious miner, of course, knows that if you're mining Bitcoin, if you believe in the Bitcoin ecosystem, doing something to disturb that would only be detrimental to yourself. So I think the risk is dropping as we speak, and it's only going to go down with the amount of hardware delivered.
I just noticed, did you guys realize we're at a racetrack? Weird, huh? Now, if there is any industry in our Bitcoin ecosystem that feels like a racetrack, it's mining hardware. So how did I convince you guys to sit at a panel and not spit at each other and stuff? What do you think of the community amongst other hardware developers and that sort of thing?
At least at the Bitmain, we're not going to upset any other manufacturer. We spend our energy on our product and not worry about anybody else.
I would agree with that, and it also, the guys up here will find this funny. Most of us suffer from a distinct lack of sleep. And a distinct lack of sleep over a very long period of time. Our options are, we can get up here and argue, or we can sleep.
Yeah.
It's not a hard argument to make.
I think that's very true. And I also think that everyone in the hardware business sort of realizes the fact that it's, at least there's a multitude of very serious competitors and competent people. And I mean, some companies are going to do better than others. Some companies, have solutions that the community likes better than others. But I mean, when it comes down to it, it's a bunch of talented people doing the very best they can. And we at Cointerra, I mean, we have nothing but respect for our competition, and anything else would just be counterproductive.
I think also the whole point is to compete. The whole point is, decentralized. The whole concept is to have as much competition as possible, and that's not only in the providers of the technology, but also in the the users of the technology.
I think that another way to cast it is that there is a competition at play, but it's not principally between Bitcoin ASIC manufacturers, but it's that all of us are competing with the Visas and the MasterCards and the SWIFT and ACH of the world. And so we have maybe $1 billion industry here just lighting the fuse on, $100 trillion. That is the real contest. So we're just getting started. And whether there's a tiny Cisco here or whether there's a Juniper Networks, in the rough, is something that'll be determined a few years down the road, just like if this was a panel about internet router manufacturers in 1994, that's the real contest there was the telecom guys, not the other router guys.
Well, very good. I think that this is about all that I have for the panel, but we want to open it up for questions from the audience. So if you have a question, then you can come up here and I'll lend you a mic because we are recording it. And don't be shy. Hurt these guys' feelings. Does anybody have a good question? All right.
Hi, my name is Blake Anderson. I do a lot of different stuff with Bitcoin. One of the things that I do is I work with a contract attorney to go over mining contracts, how to make them legal and robust. One of the things that I've been considering as a way to maybe sell mining contracts or miners is to point out that on a risk mitigation scale, it's less risky to mine than it is to wildly speculate. Do you guys find that that's true, or that the value of speculation outweighs that risk?
What kind of speculation are you referring to?
Buying high and selling low.
You mean like buying the Bitcoin?
Buying low and selling high.
Yeah, inverse of what ipso facto.
This guy knows how I trade.
That's the difference between investment and speculation, right?
A very fine line.
Yeah.
That's actually something I could speak to, because we have a very large number of clients who, that's actually a question I get asked on a fairly regular basis. You know, why should I buy $100,000 worth of miners from you when I can go to BTCE, Bitstamp, Coinbase, and buy $100,000 worth of Bitcoin? And it really seems that there's several types of customers who look for that type of thing. And one large segment of our customers that I did not even realize until very shortly was there's a lot of people who, you may make more money buying and selling Bitcoin directly, but as was pointed out before, there's that large segment of hobbyists. They want to have something in their hands. They want to have something they can fiddle with, they can tweak. Whether or not that helps them or kills the machine it's irrelevant to them. It never even enters into the conversation. It's you've got people who go out and spend, and this is no offense to anyone, $100 on a set of super nice movie tickets, food, and dinner, the whole works.
Or some money on a conference.
Yeah, or that's another example. Whereas if you buy a Bitcoin miner, you are buying something that if it's not guaranteed to ROI, unlike most hobbies, this hobby generates money quite directly, and that has a huge. It's like free advertisement. It's not that hard to sell something that you can say, well, if it doesn't ROI, then it's still better than your remote control car you bought. It'll produce you something for the future.
So I'm trying to take the more commercial side of it, and it is, as I said earlier, it's very difficult to figure out when's the right time to buy Bitcoins directly or when's the right time to buy mining equipment. And generally, if the price of Bitcoin is high, you should be buying mining equipment. And if the price of Bitcoin is low, you should be buying Bitcoins. I think that's in general, but obviously there are going to be times when you should be speculating or spreading your eggs.
Yeah, I mean, just to follow up on Jez's point, if the price was exactly the same of a Bitcoin on the spot market and what you would have as your, Bitcoin output over the lifetime of some mining equipment, incorporating all the operating expenses and so on, then obviously one should just rationally buy what's on the spot market at that point. So it's a given that the reason that people, theoretically would be mining is because they expect to have some discount that is representative of having to run and wait. You have to wait a few months, and you've got to run this equipment, and it has a cost. So if you didn't have a discount, if you weren't essentially getting the output at a discount to buy on a spot market, then there would be no point to it. Now, that said, there are also, I believe, some reasons why people buy mining equipment apart from that purely rational calculation. That is, the spot market's only so deep. So if you are actually trying to buy Bitcoins in the large, like if you want to buy $100 million of Bitcoins, you really can't buy that on the spot market. So then you'd have to mine it.
And from a sort of development sales standpoint, I also run into a few other reasons for purchasing mining over sort of spot market purchasing Bitcoin, or which is there's a surprising amount of people that, outside of just liking the idea of mining and sort of getting a community feel out of doing something for the network and growing awareness, etc., there's a certain sort of privacy libertarian angle, which is, if you're mining Bitcoins, nobody knows that you are mining Bitcoins. I mean, theoretically, there are ways of probably figuring it out, but you can put a miner in your basement and, you know, in a couple of months, you'll have a bunch of Bitcoins that are truly yours to spend if you would like to. It's like digging gold out of your backyard.
Just
versus
to add to that point, when you mine Bitcoins and they arrive in your Bitcoin wallet, they're fresh. They actually haven't come from anywhere. They actually say newly mined coins. Whereas every other Bitcoin that you buy has a history attached to it. So some people actually I prefer newly minted Bitcoins to used ones, even though there's no value difference.
Absolutely. And then there's also, I mean, at least historically, it's been a better value proposition to buy miner and mine coin than it may look on the surface. If you, for example, bought a Bitcoin miner in early 2013, like an Avalon, you could happily mine the value of the Bitcoin miner in Bitcoin and resell it for, 3 times the purchase value. I think that, that's still true today, that a lot of people, more or less reach ROI on their miner and then resell it to, on eBay or wherever they may, find a buyer and end up actually having a better ROI than if they would have purchased the Bitcoin over the open market.
And also in a lot of countries, it's difficult to buy Bitcoins for various reasons. So it's actually often just, there's a convenience yield to mining equipment in the sense that it's just easier to buy a piece of hardware and run it. Even though that's inconvenient, it's still easier than having to deal with, oh, my Mt. Gox account got hacked and now my personal details are out there and I had to do all sorts of dancing in order to even open it, et cetera. And so that's, and if you're in Brazil, who even knows if you can wire money to Tokyo? Like, who knows, right? So,
just as well, you could.
And I mean, it even can come down to those who have direct access to good exchanges. Like if, for example, those of us in the United States who use Coinbase. I got a really good example. Had to make a purchase order for a reasonably number of Bitcoins last Monday in order to purchase some equipment. Those Bitcoins cleared this morning from Coinbase.
Right.
My miners that have been mining since then I've made Bitcoins from them in the time that it took Coinbase merely to take money out of my bank account and give me Bitcoins in return. So whereas it is, as these gentlemen were saying, it's not just about the profit aspect. Even if you just break even on the miner, then you still got all of those coins brand new without having to go through a third-party service, giving up your ID, fingerprint. I think they've even got ATMs now that have they scan your veins.
Yeah, I've done that.
So
It's fun, You have to take your clothes off. All right. More questions? Well, I'll ask.
I have a simple question.
Well, come up to the microphone because it's recorded.
So, can just a typical average income family man coming into the market now, what I've heard is that it's too late in order to get a return on your investment with that level, without, with how the technology has changed.
Affordable.
So what is the price to get in to start mining, and can a return on investment be expected for average income kind of situation?
With our manufacturing, we drop, as of today, this miner will cost you $750 USD, and you will have some Bitcoin mining. You can start mining immediately. There is no wait. If you pay, we'll deliver, and we only sell in-stock equipment only.
And will they make that?
What's the amount of time that it takes
what's the hash rate on that?
This one, it's the 180 gigahash. You can overclock it to about 200 to 209. And today, it's mining about 0.025 Bitcoin a day. Not much, but you'll get some back.
Will you get back more than had you bought the Bitcoin?
When we publish the price, we can't guarantee or promise you how many Bitcoin this machine will produce, but we do some mathematical formula, and we're trying to push it out, trying to buyers about 20 to 30% return on a Bitcoin if you purchase it by Bitcoin. If you purchase by currency value, due to the market exchange rate fluctuate so much, we can't say how much money you'll make. But the Bitcoin-wise,
That's like plain English up. Like if I'm a family man, I have $700. I'm going to tie up $700. How long is that $700 going to be tied up before I see a return?
with this equipment, probably a month and a half, or maybe close to 2 months. And
I can put it this way. I was one of the first customers, probably,
makes one Bitcoin.
for when Bitmain first released. So I have 5 machines from the very first batch they sold and another 5 from the second batch they sold. The first 5 have already ROI'd as of a week ago. I believe I paid 4 BTC each when they originally came out. And
What price was BTC at the time? Probably higher.
November,
it was close to 700,
yeah,
I believe.
it was between 700 and probably between 600 and 800.
To be, look, for your question, you're trying to ask a simple question, and the simple answer is this is really difficult to calculate your ROI. So if you don't want to take the risk, don't do it. Either buy Bitcoins if you want exposure to Bitcoins without taking the risk of mining, because you don't just buy the miner, you still have to plug it in, you still have to pay for the electricity and the cooling, because it's going to warm up your home, and then you're going to have to air condition your home by that amount more, which is going to cost you more. So actually, economically, it's very hard to make money out of this.
3 of these units with nothing else in the room, about a 400 square foot room with 12-foot ceilings. We measured a 15-degree temperature increase over an hour.
So,
Just 3 of them.
and this is the advantage
Could you
of this.
plug some of those in the exhibit hall? I'm just curious.
The exhibit hall's fine,
Sure. If you're living in a cold weather area, you can actually use this as a space heater.
Yeah. So,
The reason is the space heater in the U.S.
so I live in the UK, and it is cold right now, and I do have a Hashfast baby jet actually warming up my toes in the office. But no, I mean, the biggest question in Bitcoin is also generally whether you should be doing this in your home at all, because these things are, power hungry. They heat your room. They're noisy. These things probably are better off in a professional place, like what this guy does and what other people in the room. There are companies doing professional hosting. There's nothing wrong with Bitcoin mining equipment. It's just how much of it makes sense in the home. That's the tricky bit.
Hi, Blake again. I can't stay away. I have a question about how you guys feel about the following statement. If the past is any indicator of the future, Bitcoin mining becomes retroactively more valuable as more time goes by. How do you feel about
Sorry,
that?
how do you work that out?
Well, if it continues to be deflationary, if it continues along the trajectory that it
Bitcoin
has,
mining or Bitcoins?
Bitcoin mining, the work that you did retroactively becomes more valuable as the price goes up.
That doesn't correlate.
No.
No, that doesn't correlate.
Well, I think what he's trying to say is, let's say you got this thing and you paid $750 for it, and it only produces 0.05 Bitcoins before you give up, and then the price of Bitcoin goes up to $50,000, and 0.05 times $50,000. Oh, I certainly made my money back.
So I think
Absolutely. But what we're getting into here is what many people call the miner's dilemma, which is the concept of valuing a miner's worth based on anything but the current Bitcoin price, which a lot of people like doing, but forget the fact that if you have access to spot market Bitcoin, doing that is absolutely pointless.
Well, but you see that here's the other observation. Why would I invest in GEM compared to what Bitcoin's doing? I mean, seriously.
No, absolutely.
Went up a factor of 60 last year. What other investment did that?
yeah, but it's not going to do a factor of 60 this year, and in fact, it went down this year. So
No, it's gone down so far.
okay, so far. So yeah, you've got 2 separate risk factors. You've got the price of Bitcoin, which is one whole risk factor, and then you've got the difficulty or the network difficulty of Bitcoin mining, which is how many new people are mining every day, and the equipment is getting more and more powerful, and in some cases cheaper and cheaper. So those 2 dynamics, I mean, as I said earlier, when the price of Bitcoin is high, buy Bitcoin miners, because you're generally they might be priced in dollars, but you're paying for them in bitcoins, and so you get more Bitcoin mining hardware for your money. When the price of Bitcoin is low, buy Bitcoin, or even spread your eggs and do both, which is what I did. So I bought a whole bunch of Bitcoin mining equipment, and I continue to buy Bitcoins whenever the price drops.
And I also think that was it Sean that said something about like the sort of trying to spread your risk. And I mean, coming from someone that sold 7,500 Litecoins at $1.50, I would say that, you know, maybe mining is a way of sort of psychologically spreading your risk. I mean, it's really easy to, you know, think that you'll be really good at buying and selling, you know, buying Bitcoin low and selling high, but at the end of the day, having, you know, miners just sit and chug away in your basement and send coins to your wallet that you don't really consider liquid funds is I think for many people a way of looking at it like it's money in your mattress. Like once you have it, it's a little bit like the difference between a savings account and a trading account. I mean, your savings account is for rainy day or, you know, when your car breaks down, and your trading account is sort of, you gotta look at that as money that they're not yours until you take them out.
So it could be that, you know, you're getting at a more sophisticated or nuanced point, which is that in certain jurisdictions, like let's say Texas or Canada, there are a lot of tax advantages to mineral or extractive industries. And so if you had done something that you consider, you know, hey, I'm going to use depletion accounting because this is like an extraction thing, you might have some sort of sophisticated way to be better off even if the price was the same. But that would be through consultation with like a, you know, your tax lawyer and accountant and so on, and it would be hard to make a cut and dry statement about it in any rational way, just based on the price of Bitcoin.
Okay, I have a question for you guys. And I know this conference, it's all about Bitcoin, but now that I have, you know, ASIC manufacturers, I want to ask you about the altcoins and mining, and if you think that script mining will be, you know, something that an ASIC manufacturer will get in the near future. Charlie Lee is around here too. So.
Okay, let me warn you. We only have 2 minutes, so
I got
make
a really
your point
quick response.
Me too.
There is already a script ASIC.
Yep.
It already exists. It's already on the market.
Several.
Grid Seed.
Yep.
And actually,
I have a bunch.
not to you know, advertise ourselves, but we have a very, very large number coming directly from Grid Seed. So next week. I got the shipping notification from them this morning.
I have miners stuck in customs right now, straight from Shenzhen.
I have the exact opposite view. So I think there's a question mark when you can use ASICs to mine other altcoins. What happens? Because right now, many of the people mining altcoins are only doing so to use graphics cards that they would have otherwise, been mining Bitcoins had the ASICs not arrived. And so when the ASICs now arrive, and they are arriving for script mining, how does that affect the marketplace, and does that make it less worth people mining? Also, there's another point is that many people mine altcoins to sell them and buy Bitcoins. I'm not even sure who's mining altcoins to keep them as altcoins. Maybe there's a few. But you know, many of the script miners out there are just swapping them for Bitcoins. So they're just using it as a way of getting Bitcoins. And when that's no longer viable, when ASICs have taken over the entire marketplace, what happens? We don't know.
Okay, well, guys, I give these panelists a hand.